Yeah, hi everyone. So, good evening to you all, and welcome to the payments panel. We'll try to make it as interactive as possible since we have a very, I think, a small audience here today. We cover three aspects. So, the first aspect is about how best we could build on basically layer one infrastructures and how you could scale quite rapidly around, see the impact of AI and digital assets, how that's influencing the system. And in terms of the third aspect, it's going to be the interoperability, which is quite important both in the TradeFi and DeFi space and also amongst chains within the DeFi space. So let's start off with Sabrina here. So Sabrina, as we know, one of the most talked about topics is literally interoperability amongst TradeFi, DeFi, and then amongst chains within the DeFi space. So in terms of, in terms of Hedera, how they're going about it, where do you see, the trends that are coming about? How is Hedera actually looking after those there?
Yeah, that's a good question because you're going from complex to maybe less complex, right? When you come from TradFi, you have to start. You have to worry about compliance. That's I think the main hurdle.
Yes.
So if you're talking about tokenized assets or stablecoins, like you have to bake more information into the asset, and you have to take into account KYC. Those are like kind of the two things that typically you don't have in the DeFi platforms, or it's permissionless. Anyone can interact, through a pseudonymous account, and it's great you have that freedom. But if you want to play with financial institutions and financial tokenized assets, you kind of have to play, by the rules. So things that we found that at the technology level were important to have is so first is the digital identity, right? Slash KYC, and ideally it's on chain, so it's portable.
Yes.
So we're working with companies like Terminal 3, for example, that has the compliance, the on-chain identity and KYC, and that is at the same time still privacy preserving. In terms of the asset tokenization, so we've done some work with the ERC 3643 format, which is for security tokens, but that bakes in the ID part. So the smart contract allows to follow rules based on whether the counterpart is qualified to interact with the token or not.
Yeah.
So and then you go down to more like the fundamental, like the on-chain, the chain level, the OS, and then there are some design decisions that have been made also on our end at Hedera to allow for more controls of the assets. So, for example, our native token service, Hedera token service, allows for the issuer to have a freeze key. So the freeze key will allow to freeze an account. And then there's a wipe key, and then you can use that to wipe a balance.
Okay.
Right, and you have also the pause key, which is kind of like your red button, where you could pause all the transactions across the network for a given token. So things like that to kind of be compliant friendly. You add more programmability to the tokens so that they can interact in a compliant way. We also have like a KYC flag in the token, so you are on a white label basis as opposed to completely permissionless basis. So it's just you kind of have to make some adjustments, I guess, from the more open ethos of the decentralization. But otherwise, it doesn't really work with financial institutions.
No, that's actually quite accepted on that side. So let's bring Chen into the conversation. So I think recently USDC integrated with XDC. So how has the role now changed in terms of providing a more faster, reliable, and cross-border payment system?
Yeah. So what we had integrated over at our site was Circle CCTP V2. So that is something which allows interoperability not only via XDC itself, but other blockchains, which also include the likes of Sol as well as Base as well as the other L1s as well as L2s, which are already plugged in within the Circle's ecosystem itself. So I think what we feel is that, like there is no zero-sum equation itself. So we want to be as interoperable as possible. So I think something which you also might be good to know as well is that for XDC, we are also part of Layer 0 as well. Okay. So, like in terms of our assets and so on, they can be interoperable together with all of the L1s which are supported via Layer 0 as well.
Okay. No, that's quite interesting. So we'll bring Rahul into this conversation. So I think one of the critical aspects, because faster payments, more reliable payments is the biggest use case now for stable coins. But there seems to be a lot of regulatory hurdles that are popping by. Clarity is not yet properly known amongst various jurisdictions. So in terms of your view, what sort of assurances do you think that these regulators would want in terms of having greater confidence?
Thanks for the question. So I think obviously you stated already there's a great disparity in terms of the regulatory approach and clarity, right? So you have at one end the Western push for innovation and acceptance, and the European push for regulation and control. And Asia, I guess, you have markets like Singapore, Hong Kong, and others kind of trying to get clarity and direction. But there is essentially a spectrum, right? It's not clear what exactly is the universal landing point, right, on regulation. And when you look at the regulator's perspective, and as part of my role as an advisor to both public and private sector firms, I do spend a lot of time discussing these topics. I think the regulators are first of all reactive to what has happened more recently. So, the crypto winter is kind of getting forgotten a bit, but still the stablecoin crashes have not, right? So, and there's still about 200 odd stablecoins out there. But yet, in terms of stability, and especially as they get systemic, the question about institutional use and financial stability kind of keeps coming back to the regulators. So I guess that transparency and the backing one-to-one against the right assets is already being clearly defined in whether you look at the US or Europe in terms of regulation, right? So they have started that clearly, and that's one of the factors which I think they'll be looking for, regulators. The other bit which I think we just came up was in terms of compliance, right? So I think compliance is an area which continues to be a leading cause of concern. So in terms of how to capture and how to retain, the right level of security and trust is again something. So compliance by design is one factor, I think, which will be looked at more stringently, and it's being considered. And the other factor is just having, fundamental financial services rules, like, for example, the FATF Principle 16, and the travel rule, right? Having full traceability of where funds are coming from, where they're going. And that's just not the platforms, it's actually an ecosystem move, right? So that's, again, something where regulators are keen. And maybe the third part, I would say, is on, resiliency, and just ensuring that, you have the fundamental business continuity in case of, extreme situations. And that's, again, probably a third factor that they would be looking for. But it's still an evolving space, yeah.